vote.
This meeting is being recorded.
An on-chain vote, that's the one for Stellaswap that we'll come back to. And then there are 3 proposals in the request for comment stage. So the discussion is open on the forum. There's one for linked pools, one for listing CFG in the Omnipool and Hydra, also on the agenda. And then there's a proposal to make some changes to our governance process. And another thing is that back in December, we had a proposal, CP6, which was to implement a block reward and improve the collator cycle. And that proposal is going to be part of the next runtime upgrade that is going to be launched on Altair first, followed by on Centrifuge. And what that proposal is going to do is it's going to fund the treasury in the short term and automate the payments to the collators. So, and the last thing I want to say is the announcement of the next batch of 5 collators on Centrifuge. And those 5 collators that are going to be onboarded next is Good Karma, Polka Dotters, Stakerspace, Pathrock Network, and the funky one, Lucky Friday. So congratulations to all of you, and there will be an announcement post on the forum shortly, within the next 2 days, describing the onboarding steps, but most of you have already tried it before, so it's going to be very similar, but we're going to post that on the forum, and the plan is to start the onboarding process the 31st of May, so in 1 week. So that's all I want to say. I will pass it on to Stellaswap, Steve, to talk about the listing proposal on Stellaswap. Are you there with us, Steve?
Yep, I'm here.
It's all yours.
All right, cool. Yeah, so my name's Steve. I'm a community manager over at Stellaswap. I'm also a Centrifuge holder. I participated in the crowd loan, way back when that happened. So this is very exciting to see all the updates that are going on here. Yeah, so a little bit about Stellaswap first. So we're the largest decentralized exchange on the Moonbeam network. And about 5 months ago, we made the jump from constant product pools to concentrated liquidity. For those of you who maybe aren't familiar with it, it's basically the same sort of thing that Uniswap v3 does. So when you LP into a Stellaswap pool, you're not providing liquidity from 0 to infinity, like in your standard V2 constant product pool sort of decks. You're selecting a range to provide liquidity in, and what that allows you to do is to put more of your capital to work. In a constant product pool, usually in a given day, maybe 5% of the tokens are getting used. That ratio is much higher in a concentrated liquidity pool. And what that means is you can facilitate significant amounts of trading with relatively modest amounts of TVL. And since you only need modest amounts of TVL, the incentives that need to go along with it are also correspondingly modest. So our proposal for Centrifuge is to mint around $4 grand worth of CFG tokens and provide those as incentives to a CFG dot pool on Stellaswap, which we think will be very successful bootstrapping a pool and getting trading activity going on Moonbeam for the Centrifuge token. So then on top of that, we also, so a lot of success in DeFi is just creating awareness for your product. And when users come to Stellaswap, we get a lot of users who are not Polkadot native. They're coming in from other EVM chains, rollups, that sort of thing. And they're not necessarily familiar with Polkadot products. They're coming from like Arbitrum or something like that, and they're just here to stake ETH. And so, they don't necessarily know about Centrifuge when they show up. So when they come in and they look at our pools page, on our Centrifuge pool, we're not just going to have, CFG dot and the ticker symbol, and that's it. We'll also have a learn more link so that, you're scrolling through here, you're like, oh, there's an interesting APR on this token. Let me learn more about it. And that'll link to Centrifuge's website and get them excited about real world assets, turn them into a Centrifuge holder from, some mercenary, ETH liquidity provider from, random Ethereum rollup. And that's really what we're going for with this proposal. Kickstart trading on Moonbeam and try to, evangelize a little bit and, convert folks into Centrifuge holders. And I'm not super familiar with the format. Do we open things up for questions, or do I just kind of say my piece and then turn it over?
Well, we can definitely open up for some questions, but I just want to add a little bit extra context. First of all, thank you very much, Steve. Just to add some context, there was an off-chain vote, an open square snapshot for this particular proposal that already passed. And now there is a democracy proposal on chain as well. So if there are no other democracy proposals that get endorsed more than this one, this proposal will turn into a referendum at 10:46 this evening CET that all token holders can vote on. So it will still need to pass on chain before these incentive rewards are minted and into the Moonbeam wallet. So
yep.
That's all I just wanted to add for context. So it's going to be open for a referendum vote in roughly 5 hours.
It looks like somebody's asking, what are the costs on the Centrifuge side? So, basically, in terms of incentives, like I mentioned before, it's about $4 grand worth of CFG that would be minted as incentives, and there's a corresponding amount of Stellar tokens that we would also be putting in the pool. There's kind of a 50-50 split on the incentives there. Did anyone else have any questions?
There was another question from Jeroen. Do you want to ask it yourself, please?
Yeah, I'm happy to repeat it here. Yeah, I'm just curious. I mean, I'm a developer at the Centrifuge team and always looking at it from a technical perspective, I guess. But I don't see much custom development that Stellaswap is doing. So I'm just curious, like, how you want to differentiate yourself from. I know Uniswap is planning to deploy through Wormhole, I think, on Moonbeam. And obviously that comes along with other benefits. And then Hydra, I know, like, I think we'll talk about it later, but it's a pretty unique AMM, I would say, in many ways. I guess we'll talk about it later. I'm a bit curious just how Stellaswap differentiates itself.
So about 5 months ago, we integrated Algebra for concentrated liquidity. And basically what Algebra does is they provide a set of smart contracts that you can then build on top of. So Stellaswap uses Algebra, QuickSwap over on Polygon uses Algebra, and there are a number of other DEXs across the ecosystem that are using them. And the key differentiator between Algebra's concentrated liquidity and Uniswap's concentrated liquidity is dynamic fees. So when you LP in Uniswap, you have to select your fee tier. And so in addition to having to kind of be opinionated about the price of the tokens that you're LPing, you also have to have a sense of what fee tier is going to be optimal for you. So that's just another thing that the LP has to figure out. And Algebra kind of automates that. And so basically, there are a number of factors that go into it, including the TVL and the volume hitting the pool, the percent utilization. And the fees can vary from, just a basis point to like 30 basis points, or I don't know off the top of my head what the numbers are, but it figures that out for you, which is a important UX improvement over Uniswap. I think Uniswap probably didn't go in this direction initially, just because recalculating the what the fee would need to be would make Uniswap a little bit less gas efficient, which on Ethereum mainnet would be a big problem. But on a chain like Moonbeam, that additional gas cost from the contract calculating that is not particularly impactful. So that's why we think that Algebra's product is a little bit better. It also comes with integrated farms, which Uniswap, to my knowledge, doesn't have. So that's a big differentiator between us and Uniswap. And then I'm not really an expert on Hydra, so I don't want to speak too much comparing us to them. My understanding is that it's like a constant product curve that they're running. And I've already spoken to the differences between a concentrated liquidity curve and a constant product curve. If I'm speaking incorrectly, I'm sure they'll set the record straight when they speak. But does that answer your question?
Yeah, I don't know how much time we have. I guess my one follow-up question would be, I mean, I put a link here in the chat. If that's, assuming that's the right algebra that you're talking about, like correct me if I'm wrong, that looks to be, I mean, that's clearly a Uniswap v3 fork with some small changes that you're talking about. I guess my follow-up question would be, well, one, why wouldn't Uniswap v3 adapt that change then as well if it's clearly beneficial? And even if it doesn't, do you think that fee change, which sounds like a fairly small change to me in the grand scheme of things, is going to give you a kind of significant competitive advantage in the long term against like an official Uniswap deployment on Moonbeam, which sounds, yeah. Anyways, I guess that's my question.
Yeah. So so in terms of us, and yeah, I think that is the correct link without digging too deep into it. Yeah. So in terms of long-term advantages for Stellaswap over Uniswap, so there's the fee thing that I just discussed. We have a number of partnerships already in the Polkadot ecosystem on Moonbeam. You know, we have good relationships there. We have a number of automated liquidity managers deploying on Stellaswap. Mello deployed pretty recently. We're working with Gamma currently on deployment. And that's like really like a key thing that Uniswap has. Like on ETH mainnet, they have a bunch of automated liquidity managers working with them. And so I didn't want to put this into the proposal because it's not something that I can guarantee, but we can also work with Gamma about potentially integrating the Centrifuge dot pool for automated liquidity management. And for those who aren't familiar, basically what you do is, so Gamma or whoever the liquidity manager is, you take your tokens, you place them in there, and they turn around an LP on your behalf. And so they basically have one large position that they manage. And so you, the user, don't have to take a view on token prices. You can just kind of have that V2 sort of simple LP experience while still taking advantage of the performance and the efficiency of V3.
All right, and that's gonna be the last word in this conversation. I told you I might have to interrupt some conversation, but thank you very much, Steve, for coming on. I hope it's okay if there are any more questions from the community that they can post it on the forum, and then they can be replied to there. Is that okay with you?
Yeah, I'm active in the Centrifuge forum. I guess in the governance channel would probably be most appropriate.
All right, on Discord, you mean?
Yeah.
All right, yeah, definitely. We can write them. You can write them in the chat here, and then we can gather them and put them together. But we have a couple of other things on the agenda we need to go through, so we'll have to move on now. So thank you very much again, Steve, for coming. It was a pleasure. All right, so the next topic on the agenda is also a proposal to list the CFG token on a DEX, and this one is from Hydra, and they were here last month to talk about their initial proposal, which was to open the HRMP channels between Hydra and Centrifuge, and that one passed. So now they have taken it to the next step. So Ben, are you with us again now?
Yep, I'm here.
Welcome back.
Thank you very much. Good to be here.
here.
I don't know if you can see me. Am I coming up on the? Yeah, there I am. Good.
Yeah,
Lovely.
it's here.
So as you said, I was here a month or so ago on one of your previous ones when we were talking about opening up the channel, which of course we did. Got you registered on the asset registry. And then since then, we've opened up a discussion with regards to listing CFG in the Omnipool and seeding the initial liquidity. So that discussion's been ongoing for 21 days. I've got it up in front of me at the moment, where we've proposed a somewhat maybe meme amount initially of CFG to be added, and a little bit of technical details around how that can be done trustlessly from the Centrifuge Treasury to the Omnipool. So looking at this through the discussion, fundamentally it appears to be consensus that it could be a good thing. I think the biggest question was regarding to the amount of liquidity, which obviously could be discussed and agreed subsequently, but essentially we've proposed that the Centrifuge Treasury trustlessly deposits liquidity from the Treasury, control from your governance through XCM and into the Omnipool. So what that means is that your Treasury or your governance never gives up custody of those assets. It is the controller of those at any point and can obviously withdraw those as and when it chooses to do so. And the main draw for this is that you're providing liquidity against all other assets that are in the Omnipool. So at the moment, that's against HDX, DOT, DAI, ZTG, wrapped ETH, IBTC, wrapped Bitcoin, native USDT, with many more on the way. That same amount that you would provide as liquidity is tradable against all other assets in the Omnipool in its fullness, so it's not split across any other assets or half sold or anything like that. It's just the pure, let's say for example, $100,000 worth is tradable against all other assets immediately. And of course, over the long term, your treasury is unlikely to be looking to trade the CFG tokens in and out of positions, etc. So it'll be a long-term sticky LP, which means obviously it gives you the opportunity over time to actually earn some fees, some trading fees for your liquidity. So typically, if you look at alternatives with market makers on a centralized exchange, you have to give up custody of your tokens, you have to pay them fees for the ongoing market making, and obviously you run a risk of losing those, as we've seen in recent years. So you don't have those issues if providing liquidity to the Omnipool. And also over the coming months, as we unleash a bunch of new features such as dollar cost averaging, it gives new ways for new entrants into CFG or people looking to exit CFG to sort of purchase in different ways. So for example, rather than doing one big trade and incurring a lot of slippage, you can break that trade down into hundreds or thousands of smaller transactions because of the low fee environment that we have on Hydra, meaning that you get the best possible price execution over that time, and it makes you MEV resistant, because what's the point in front running a $1 transaction? You're not going to make money off of it, and you have to sort of price manipulate for long periods of time. Also, soon we'll be releasing dynamic fees, which has got the ambition to sort of make positions more profitable at times when it's more volatile. There's other features along the way as well, but that's the sort of summary and cognizant of the time that you guys have got. So yeah, keen to know if you guys have got any questions.
Thank you very much, Ben. Any questions from our community to this particular proposal from Hydra to list CFG on the Omnipool, and this setup with our governance being in control of the tokens?
Yeah, maybe I have a question. I saw on the forums that some users left feedback about the amount requested any chance that this amount will be changed, or you are still considering to request that amount of tokens?
So the amount is ultimately entirely at your discretion. So initially, the reason that we asked for the amount that we did was that we'd had sort of previous discussions, and there's sort of, you know, the more liquidity you have, of course, the lower slippage swaps that you can therefore complete without getting wrecked on price movement, right? So that was sort of an initial amount. However, going through the discussion, I think a more realistic amount based on several factors would be around $100,000 worth. You can see on the decks, and Jay Green's even provided a few examples in there, how that liquidity sort of scales, like that price movement scales depending on how much liquidity you provide. So the Zeitgeist team, they provided about $200,000 worth of liquidity at the time, and if you had $1,000 trade against that liquidity, you're looking at 0.6% price movement. So if you're looking at half that liquidity, then you're probably looking at just over a 1% price movement for a trade in that size. But ultimately, how much would be at the discretion of the Centrifuge governance. Other teams and other projects that we've talked to are ranging between $100,000 and $300,000 worth as a starting point. You know, it varies depending on how much treasury they've got to play with, and sort of what sort of level swaps they're looking to facilitate.
Thank you, Ben. Yeah, I believe the proposal from Hydra says 2.22222 million CFG, which currently corresponds to like a little bit north of $400K worth of tokens. So yeah. So I guess what you're saying is that you are willing to hear a counter offer from the community if they believe this amount is too high.
Absolutely. I think, yeah, that was like I said, that was a starting amount, but generally the feedback is that that's too high. So obviously when it comes to actually making the formal on-chain proposal or whatever the next stage is, we could obviously tailor that down to, you know, the equivalent of $100,000 equivalent, if that was a more palatable number.
Great. Any thoughts from anyone regarding like the amount of tokens now they want to share? Whether it's an okay amount or it's too high?
Not so much the amount of tokens. I just wanted to give Ben some props. I just finally became a CFG holder. I had only crowd loaned to Altair back in the day, and just trying to get the CFG token, and I had to go through KuCoin, and like my limit order was like, it wasn't even a lot of money. So I think having this level of liquidity in the ecosystem that we can get on a DEX is huge. I just think it's going to expose a lot more people to the CFG token, the narrative, RWA, everything else that you guys are trying to achieve. So I'm very, I'm a huge proponent of what you guys are trying to do and bring in this liquidity into the ecosystem so we can get it on DEX, especially with the limit orders and everything else that is being rolled out. I just see it as a great opportunity.
Thanks for sharing, Ryan.
Appreciate that, Funky.
Anybody else has anything they want to share regarding this proposal? Any feedback?
I'm just looking into the forum where Devin posted that the CFG would be minted, but that's not the case, right? So it's like it would be taken in the treasury where they already exist.
There are no funds currently in the treasury. That's the proposal I mentioned in the beginning. The CP6, the block rewards, is aiming to fund the treasury, but there are actually no funds in the treasury right now.
Okay.
So did that answer the question, Evan? So they would need to be minted.
So they would be minted and then they would be transferred to the pool.
Right. Any other questions? So yeah, they would need to be minted and then they would be transferred to the pool, but the funds would stay in control of Centrifuge governance.
Yeah, that was clear to me.
Yeah. Great.
Yeah, I think it's key to highlight there that yeah, I know sometimes there's some concern around minting of tokens, etc., because obviously it's additional circulating supply. But it's important to understand that due to the fact that it would be the treasury and your governance that's providing the liquidity, it's there as a service to CFG or potential CFG holders, but ultimately is never circulating, right? Like if your governance decides to then withdraw that liquidity, it's straight back in your treasury, where you could, I don't know, choose to burn it if you wanted to. So it's important to confirm or to clarify that it's not, you know, it's not like it's been minted and then distributed widely and then you've got a lot of supply coming at you. It's there and it will stay there, probably unlikely to move for some years, I imagine.
Thanks, Ben. We can do one quick last question. I saw Steve typed one in the chat. Steve, do you want to ask it yourself or do you want me to read it out?
Oh, yeah, it's just kind of a technical question. I'm just fuzzy on how exactly the Omnipool works. So like Centrifuge puts some amount of CFG in there as a single-sided liquidity position into the Omnipool. And then somebody comes along and swaps, you know, 1 DOT for some amount of CFG. Does Centrifuge now have a position composed of a bunch of CFG and then that 1 DOT? Or is there something else going on? So would Centrifuge end up holding like a basket of tokens in addition to its single-sided CFG liquidity?
So how it works in these automated market makers is that obviously your price is determined by the ratio of one asset for another. So in the Omnipool, all assets are, they route through our hub token learner. So everything's essentially, consider it as being paired with learner. So what happens then is that, say somebody buys CFG from the Omnipool, the number of CFG in the Omnipool reduces, and yeah, like you say, another asset would go up, and that would, in theory, then because you've bought, that would increase the price of CFG relative to other assets. Now, obviously, CFG doesn't exist the Omnipool doesn't exist in a vacuum. There are many other markets for CFG, and those markets combined create the actual market price for CFG. So what then happens is if you have Omnipool sitting with some liquidity and, oh, look, here my CFG is worth $1 because there's been a big load of buying, but here it's worth 50 cents, then what you'll find is people will then buy the 50 cents from an external market, sell it into the Omnipool, and that will bring back down that price scale. If there was any, if you withdrew the position and there was, for example, calculated that you had suffered unnecessary impermanent loss, then you could be due some learner as a sort of mitigation for some of that. That learner is obviously a asset which represents the weighted average of all assets in the Omnipool, and could obviously then just be swapped for either more CFG or another asset as a forms of diversification if needed. But generally that's not needed because you have those arbitrageurs who bring those market prices back.
I would just add that actually this is very interesting example, because break it like a little bit more down, is that when someone is buying CFG with DOT, that DOT is sold for Lerna and the Lerna is sold for CFG. But that means that the DOT is also sold against Lerna, which is like pushing the price of the little bit over more. So it's creating also arbitrage opportunity to sold back DOT to the pool for something else, which is like creating like very interesting game theory of like harvesting of volatility.
Thank you very much, both Ben and Jakub. Appreciate both of you coming again here and taking your time to both present and answer our questions. I guess we need some more interaction in the post on the forum, so some sort of an agreement can be reached, and then we can take the proposal from there. So thank you again, guys. Appreciate it big time. And we can move on now to the next point on the agenda, which is a proposal for legal review of the 1754 factory. And This was meant to be on the agenda. It was on the agenda last month, but Christian unfortunately couldn't be here. So thank you for coming again now. So Christian, if you are ready, I'll pass it to you.
So, yeah, no, thanks, Juan. Nice to meet everybody. So my name is Christian Peterson. The reason I put, before I introduce myself further, I put this proposal together because I saw this as a really good opportunity for the Centrifuge community, the Centrifuge platform, to improve and to learn and, build on, some of the activities that have been going on with 1754 Factory. So my background, I'm a project and structured finance lawyer, practiced in law firms for 15 years, in-house for 10. And then over the last 2 years, found myself in Maker, where I led the real world asset, the infamous real world asset group on the legal side, and was responsible for putting together the SocGen transaction, the HVB transaction, the block tower transactions, which are on Centrifuge. Also worked, again, representing Maker on the, putting together the Monetalis Clydesdale, so the 500 million that they've put into ETFs. And then also recommended no's on a lot of transactions that came before the community. So that's a bit of my background. And to me, what 1754 Factory really shows is a need for greater rigor and transparency in crypto. It's always puzzled me, blockchain and the DeFi space has really been all about liquidity and putting money into loans and less focus on really getting repaid. And as my colleague and Maker used to say, it's, it's easy to lend and it's really hard to get repaid. And, I think some of the discussions that were going on in the forum regarding 1754 Factory showed to me that, having something posted on RWA.XYZ on the Centrifuge app, just in terms of numbers themselves, actually isn't enough, right? It's not enough just to know that something hasn't been paid. The question is, why hasn't it been paid? All of these agreements have covenants built into them, but there's no monitoring of those covenants. And that seems to be a real shortcoming. In the DeFi space, it's been more just about, we've got liquidity, let's put it into something and, cross our fingers and hopefully something will get repaid back, as opposed to kind of having a rigorous review of the terms and conditions that have been agreed, or even, improving the terms and conditions. And as some of those who know me, I've been somewhat very vocal, certainly in the Maker community, about really trying to improve. And that's why one of the reasons I love Centrifuge is because you guys are moving things along on a smart contract basis, but there's still so much more to do, and trying to find ways of, improving the contractual relationships between the lenders, the borrowers, using the technology that you've developed, additional technologies that are out there to give lenders better visibility, because frankly, as I look across the space, the visibility is kind of poor, to be perfectly honest with you. If you look at what we did at Maker regarding, for instance, HVB, Anchor a Trust provides a monthly attestation that they post in the Maker forum. That's a start. I mean, we weren't inventing anything new. We were just like, okay, what would, if you were doing a securitization, what would you expect to see? And I think there's just a lot more room for that type of activity. So that's why I say this is an opportunity to kind of investigate what happened at 1754 and really make some recommendations as to improvements. So that is kind of the essence of my proposal. I think there was a question, or at least a hand.
Fabian, if you're okay with taking questions now, Christian, then Fabian has one. Go ahead.
Well, first of all, I think I 100% agree with what you're saying. And I think the best way would have to, I mean, my DM is open on Telegram, so I wish you contacted me to talk about it, because I will welcome a collaboration. As you know, it's like a lot of things we can improve in terms of communication, transparency, and other. And the second thing, so bottom line, I would love to work with you, and we can schedule a call together. The second thing is where I'm differing from your proposal. I agree with what you're saying about like find a way to communicate efficiency while respecting also the regulation around like debt securities, because that's what it is, drop and tin. The only thing I kind of disagree with your proposal is I don't think the centrifuge community should pay for it. I think this cost should be bear by the issuer, or it should be back into the issuance. Yeah, so basically happy to work with you as maybe a consultant for 7054 and publish things on the forum based on our work together. But I don't think it should be economically, I don't think it should be a burden on the centrifuge community, and the fund doesn't even exist yet. So otherwise, everything should be on chain.
Yeah, no, look, if you have followed me on Maker, you will know that I basically also argued for a long time that the borrower should pay for all external legal fees. So I agree. That's par for the course.
I mean, 25K during a bear market, we need to talk about it. But yeah, we should work together, and if we can find a way to also put also some guidance for the future pools, it will be fantastic. But yeah, there is a lot of work to be done for sure.
Yeah, thank you for that, Fabian. And to me, again, in the Maker side, radical transparency. We would say that sunshine and light is the best disinfectant. And I think it's so. I appreciate that. I appreciate your enthusiasm to do that, and I think it's just, frankly, it's better for the community. I mean, not just Centrifuge. It's better for the RWA space, because at the end of the day, it's not going to grow. I mean, I'll just be perfectly honest with you. It will not grow. RWAs will not grow unless we do better than what TradFi is doing. And right now, we're not doing better than what TradFi is doing. You get a lot more transparency in the traditional financial world. Okay, you can see numbers, but you need to be able to see more, and you need to hear more, and just to have more visibility. So my challenge is that, coming from a lawyer, I would say that, but I think the challenge is to really ensure greater transparency across all RWA assets, because then it will.
Yeah, we will discuss that together, but I actually talked to WTI and Triple Point, which is basically like are the biggest issuer in debt in the US. As you know, they take the space left by Silicon Valley Bank. And yeah, no one is planning on issuing large amount of money or investing large amount of money into the DeFi space using those protocols. And I think the biggest thing, like you said, is transparency, governance, security interest against the asset has been issued. And the last one is also cash in, cash out. But again, I know we don't have a lot of time, so we can take that online and post later something together. But I think the only way we can make it work is to find a way to do farm to table, meaning that loans need to be issued directly through wallets by the end users. So you need I'm talking about the consumer debt side, right? You need to be able to issue the debt on chain to provide 24/7 full transparency over issuance, and we're not here yet. So yeah. Okay, cool. Thanks. Well, thank you for welcoming my comments, and you have my Telegram, so you should connect with me. And
can I ask, what would be a next step for Christian? I guess Fabian, you wanted to propose that maybe. Are you interested in chatting about this together, and then kind of posting an update on the forum of how that conversation went?
Yeah, to me, it's like two things. Is like, and Christian, like it's your proposal, so I don't want to. But like, let's like it's a proposal put on comment right on stage. It will take several months to fund the treasury to make it like. I think it's not worth it. So what we can be done is like you and I, we can. This week is packed for me, so we can schedule a time next week. And we can create a scope of work. And Lucas, if you're okay with that, we can post the scope of work together on the forum and we can execute on the scope of work together. But yeah, there is a lot of work to be done. I think 7050 for Bling pool can also teach a lot of things on future issuers. Branch pool is working very well, so I'm not worried about it, but Bling is definitely a mess on the. I mean, everybody knows, like all our investors receive like newsletter, so they know what's going on. But yeah, happy to chat with Christian next week.
Great, thank you. I'll reach out to you. Thank you.
Thank you, everyone. So
and sorry, I overstep. I talk a lot, but I think we're all here, so let's do it.
Great.
Lucas, you good with that or?
Yeah, I'm good with it. Yep.
Oh yeah, don't wait for me. No. I was just curious what the next steps were. But whatever you think, I think. Yeah, I mean, definitely want to echo the question. Like, yeah, like about a big part of our work has always been legal structuring so far, and so it's super nice that you're also looking at that and trying to help. I think it is a big hurdle for big adoption. So yeah, thanks.
And Centrifuge has also a big stake on 7050 or Bling pool. So like, I think it's good that we do that. Cool. So thank you so much for this. Again, like it. I don't think the Centrifuge community should pay for it. We're already on a bear market. There's already a lot of pressure on the CFG token. I don't think we should mint like CFG. I'm actually against minting any CFG at all. I think it's time for us to like bring the revenue engine and making like issuers and other market participants pay and create some buy pressure for CFG. But that's another topic we can talk maybe in the next governance call.
Always good to get the issuers to pay.
All right, and that's going to be the last word here. So thank you, Christian, for presenting, and thank you, Fabian, for your input as well. So the next step in this call is going to be one of the things I've personally been looking forward to, and that is the launch of the Centrifuge app, which is the result of a long time of hard work. And I know Anna had an AMA just before this call, so hopefully you're up for talking a little bit more about it now again. So if you're ready, Anna.
I'm ready. I'm super happy to finally present our the Centrifuge app that we've worked on really on the last 12 months. I think we started working on it to really set the ground for the multi-chain future of the Centrifuge app. I just linked the governance post URL in the comments. So you should have a look at the post of the forum post. I mean, most of you hopefully know how TinLake looks like and worked, and it was a good MVP. I mean, the first version of TinLake started in, I think, November 2020, and there were like 3 versions. First, there were like static pools, and then there was then the final version with the revolving pools. And a lot of our current issuers went through all the changes and bug fixes. And so this is really, you could see TinLake as the MVP, and now we finally launched like the real product. And the coolest thing is, which I like the most, is really that you can connect with a Centrifuge wallet, Centrifuge chain wallet, but also with an Ethereum wallet. So, and also all TinLake pools are now also available on the Centrifuge app. So investors have like a much smoother and nicer UI to interact, to invest and redeem. But also as an investor, if you haven't joined TinLake or haven't been verified, you can use the new KYC flow and KYB flow that we've built with Shafty Pro. And if you've got all your documents ready, you're ready in like 5 to 7 minutes to go through the whole flow. And super smooth, everything is in the app. So you go through you have to onboard you can go through KYC for the whole app, but if you want to onboard to different tranches, you need to sign like different subscription agreements. But then the issuer receives an email and then like an investment request with the data of the potential investor, and then they can accept it or reject it. But and then this whole flow, the whole new onboarding flows, I think it's a great standard that we set in the whole RWA space to how to do KYC properly. And I mean, what else can maybe I just leave it open for questions, because you've all used TinLake and maybe probably you all read the blog post. And what's your most, I mean, I didn't read the chat. Nothing here. Tell me, ask me. Or give me your feedback. That would be also good.
I've noticed most people are just really into the app, and I'm not really noticing like big questions, which actually might be a good thing. You know, I feel like with the app launch and both how the app presents itself as well as our communications, I'm not seeing anyone say like, wait, but what about this? Or what about this? Or I don't understand this, which I think is awesome.
I agree.
Yeah.
There is also a demo, which you can try. Here we go. App minus demo that came in as app.dev/pools. Yeah, I'm also happy how everything worked out super smooth. Nothing crashed. Everything went well. No funds lost. Everything's still there.
Yeah, definitely. It's cool. And one last note from my end, like watching all the Twitter replies and quote retweets and everything we're getting, feels like everyone really understands why we released the app. Like Anna said, it's basically a foundation for launching pools running on Centrifuge chain. It's a foundation for going multi-chain, getting liquidity from other chains. So I'm really excited to continue, doing more product marketing, more product launches throughout the rest of this year.
Chris, what's up?
I think you maybe already answered my own question, but I was asking, is this actually live yet, or is it launching soon?
It's live. That's why the launch.
That's awesome. Congratulations, guys. Super excited.
You can go on, wait, I link the, it's app.centrifuge.io. Go and check it out.
Very cool. Looks awesome. Looking forward to diving deep.
Congrats to everyone that worked on it. Amazing job. And I think the lack of questions is because it's going so well. So back to you, Orhan.
Thank you, Kate. All right. So if there are no more questions to this, Jeroen, you wanted to add something?
Oh yeah, I think, or I hope we spend more time on this in a future call, but I just wanted to quickly highlight that Frederick, who's a PM of the K-Factory team, he just published a proposal on the Centrifuge Governance Forum called the RFC for linked pools. I think this is a really exciting feature that Frederick is proposing here to add to the protocol. It's a little bit technical because it really is like a foundational feature that we're proposing to add. What it technically basically means, or what it enables, is a pool on Centrifuge chain to invest in tokens of other pools. And that on its own sounds very simple, but it can, well, one, it is, there's a lot of complexity with that. But if we can make it work, it can enable a lot of different use cases that are currently not possible. So issuers can basically, or could basically use this to launch kind of a fund of funds to invest capital from one pool into other pools. It could be launched to maybe create a pool that invests in a bunch of different like real estate pools or something like that. I think maybe Assad or other people here can speak a lot more eligibly to the use cases, but the point being, like, this is a technical feature that would make the protocol a lot more flexible. And I think also it's something that would really be almost impossible to build on Ethereum just because it would be so expensive. And it is really a cool technology that we might be able to build on Centrifuge chain. Yeah.
Thank you very much, Johan. So hopefully we're going to hear more about this more detail in the future, but the request for comment was posted yesterday on the forum, I believe. So anyone who wants to read more about it, there is a good explanation on the forum with diagrams and charts explaining it. I'm not a technical person, but I did understand some of it, so it is working. So, all right. I think are there any more questions related to the Centrifuge app or this new transition from Tin Lake? Anyone wants anything clarified? Well, we have Anna here.
Yeah, I have a
Go ahead,
link again. Sorry. So congrats on the application. It looks really nice. What are like the next features to expect on this application? Like, because we were talking last time about the V2 and USDC onboarding, or like, are there other features planned?
The USDC onboarding is not dependent on us. It's really on Circle and Polkadot, what they decide on. We're planning to, I mean, if an issuer will launch on the Centrifuge chain, so there will also be a pool live on Centchain. And then, I mean, we will have an update from the protocol and engineering group either next week or the week after on the next roadmap items, like of all the RFCs, like for example, link pools, and also EVM compatibility kind of combined. That just shows you like the full impact of the roadmap. So I will just point you to that for now, instead of like going into detail of like all the different roadmap items.
Okay, thank you.
I can say one thing, it's gonna be big. It's gonna be massive.
Okay, that's what we want to hear, Anna.
Stay tuned.
So, thank you, Johan and Anna as well. And we had one more thing on the agenda that we unfortunately didn't have time for, and that was the delegation research. But what I will do is I'll post the link to the forum post that is Ivan, who has done this research and looked into how other projects are doing their delegation. And this is something that is going to be very useful for us, because we're gonna start our own discussions around like how we want a delegation to be. Do we want delegation? Is it a path we want to take in terms of our governance? And in that report, there are a lot of useful data that can help us make a good decision. So please do go and give it a read. And some people have already commented in the forum post. So if you have any experience with delegating or being a delegate, please do and go and provide your input. So all Ivan's hard work is not going to waste. He has done a great job with this. So thank you for putting this together, Ivan, and sorry for not having time for it. So, all right, I guess it's time to finish the call. I want to say I personally really enjoyed this one. This was a great call, a lot of great content, good proposals, great input. So thank you everyone for being part of this and helping us get better every time. So thank you and see you in our next call. Bye.
Bye.
Thanks, everyone.
Bye-bye.
Thanks, Orhan.
Thanks. You're welcome. Bye-bye. Did you stop the recording, Kate?
No, it's, wait, sorry, just ask